In the past week, I put on a position that has a notional value of over $500,000. We're gonna be diving deep into this position. I'm gonna tell you why I put it on. And without bearing the lead, the underlying is the Canadian dollar. Now I get it, it's not as interesting as Nvidia, Apple, or some other biotech out there that we could buy options on. It's not that interesting, I get that. But the way I see it, it doesn't really matter whether we're making money trading this, that, long, short, doesn't really matter. A dollar's still a dollar, right? Now, there's a particular reason why I'm interested in the Canadian dollar, and it really has to do with the COT, which is a Commitment of Traders report. If you are a futures trader, you might be aware of this report. Essentially, it's run by a government agency, U.S. agency, and anyone that's an institution, they have to report their positions to the government. This was set up decades ago to make sure no one's going to try to corner a specific market. Like there's not some big funds out there trying to corner like the cotton market, for example, right? Now this report does come out every single week. It usually goes up to Tuesday of that same week, right? And we could use this data to kind of see how people are positioned into it and look for extremes. We're going to try to fade those extremes. Now, this data is available to you for free. There's multiple websites online that will kind of aggregate that data for you and display it easily for you to look at. This is one way that I look at the data. And what we're going to do here, we're going to be zooming in. And let's zoom in a little bit more. Okay, so let's try to break this down real quick, right? The red bars represent commercial net positions. Blue is large speculators. Yellow is small speculators, okay? Let's break this down very quickly for everybody. Commercials. Commercials in this cases are referred to as, in some markets, they will be market makers. In other markets, they could be market makers and also producers. So for example, in the cotton market, commercials would be the market makers plus people that act, the farmers, the ones who actually grow cotton, right? They would be on the commercial side of the trade. Normally speaking, we kind of want to go along with where the commercials are positioned. Reason being is that even if you're a retail investor or an institution, you typically want to fade either one of them. I mean, we've seen the returns that institutions get. It's not that impressive, right? The vast majority of them do not outperform the S&P 500. Retail investors are in the same exact boat. Now, as we can see here, over the last weeks, for some time now, the positioning within the Canadian dollar has gotten more and more short by large speculators. If we zoom in just a tiny bit more, small speculators, they would be people like ourselves. The way it works here is that if you are trading or you hold a position over X amount of Canadian dollar, you have to report that. If you're not reporting that, you're automatically seen as a small speculator. So we've seen more and more bearish bets being done by speculators over the last few months, if anything, right? We've seen it kind of grow out here. Now, normally we can't just take a trade based on this because as you could see, well, last week it also looked very, the speculators were very short, and the week before that too, right? So we have to kind of index that data. Simply, we're looking at a look back period, taking that look back period and seeing how much interest is there long or short compared to, let's say, the last 6 months, for example, right? I do have a private trading view indicator, it's not mine though, that helps index that data for us. So we see it right here at the bottom, right? The COT index. And this also displays exactly what we just saw in that chart over there, right? So we can see that over the last few reports here in the past month, right? The commercials are maximum long. The long speculators, which are denoted as the blue line, are maximum short when we consider this look back period. Small speculators are also maximum short. Notice how just a month ago, we were in a situation where the commercials were not fully long. The speculators were almost, well, in this case, actually max short, but the small speculators were kind of in the middle, right? So half and half. But now we kind of have everything on the same side. And again, this looks at the totality of the actual size, right? These bars over here, the actual amount of contracts, right? So as I toggle over here, if you pay attention over here, you can see that currently, commercials are long 138,000 contracts, right? But anyhow, we kind of have the setup that we're looking for here, where the ones that we want to fade, they're maximum short the ones that we want to go along with, they're maximum long. Okay, that's great. Now, normally we can't just take this signal because sometimes this can occur for weeks on end, months on end. This disparity between the two can stay before there's actual a reversal. So what do we do from here? Well, normally speaking, the best thing to look for is a news failure, meaning that you expect the market to do A, it doesn't do A, it does B. That tells us, hey, it did that because that position is so crowded. The simplest example of it, let's say we've had the equity markets dropping. At one point, inflation report comes out, we miss a lot more inflation than expected. The market opens up lower, but reverses, finishes green, right? We look at the COT data, it shows us that speculators will max short going into this. We can make the connection and say that, wait a minute, this reversal occurred because of the positioning and because it's so extreme, and we're now going to go long because now we got a signal, we got confirmation from the market. The fact of the matter is that the underlying did not do what it was supposed to do. And our belief is that because of the positioning. So unfortunately, there's not anything crazy with the Canadian dollar for us to kind of use as a news failure. The Canadian central government did end up dropping rates just 1 or 2 weeks ago, but it was expected, so we can't use that. That was not a news failure. Even though the currency did hold on, this is the Canadian dollar. This is the futures market of the Canadian dollar. You can also trade it on the forex market. It doesn't really matter. I'm just using the futures market for the Canadian dollar. And obviously it's paired up against the US dollar. So sure, you could kind of say, well, we cut rates and, it didn't really go anywhere. But again, like it kind of was expected. So maybe it was priced in, right? But what we can do is we can note the fact that as of recent, the US dollar has been very strong, right? So for the last 2 weeks or so, we've seen the US dollar move up. Now, obviously, any currency that is paired up against the US dollar, you're expected to see that currency weaken. It makes sense, right? If we look at the New Zealand, what was it from the 7th? Let me just look at the dollar again, look at the chart here, yep. So the New Zealand, it did go down. Mexican peso dropped down. The Brazilian went down. The yen's just been selling off the whole time. The euro's gone down. The Swiss, it's held up, but that's also because of the whole euro crisis right now with France and their elections. So that's a different topic. We'll get into that at some point or another. And UK has gone, and the pound has gone down, right? So you kind of see that relationship, right? If the US strengthens, everything that's paired up against it obviously weakens, right? When we look at the Canadian dollar, though, right, from the 7th, it hasn't really dropped much at all, right? So we may be getting that idea that there's a correlation failure here. That the Canadian dollar is acting stronger than it should be in light of the US dollar strengthening up. Especially when we have this setup, seeing that the commercials are maximum long. So on this chart over here, we have let me restart this and get rid of this. Here we have the dollar and the Canadian dollar. The dollar is orange, the Canadian dollar is in blue. So under normal circumstances, you will see that obviously always trade in inverse, right? That's the correlation, right? That when the US dollar goes up, you're going to see the Canadian dollar come down, right? It just kind of trades as a reverse mirror image of one another, as you could see here, right? And now if we go as of recent here, right? As of recent, let's say we choose this right here, right? June 7 as a point, right? So we could see from June 7 to, what was it? That goes actually until today. I think the market just opened up. It's past 6 p.m. on Sunday. So we kind of see the US dollar obviously has traded up in between those two dates. If we chart up the Canadian dollar, right, which is right, it's right there, we can also see that the Canadian dollar has also traded up in between these 2 points, right? So we can make an argument of a correlation failure occurring right now, right? You'd expect for the Canadian dollar to have traded lower, right? That's the expectation here, right? That's the expectation, but that's not what we're currently getting. If I can take a second of your time real quick, if you're enjoying this content so far, please hit that like button. It's simply gonna get this video out to more people, and I'll greatly appreciate it, so thank you. Now I'm gonna say this much. There's gonna be instances where there's correlation failures all the time. It doesn't necessarily mean the trade's gonna work, but it might just work now strictly because we have this positioning in line also. For example, right before this, we can see that as the US dollar dropped, the Canadian dollar dropped, right? This is also a correlation failure, right? It didn't go on for too long, right? Because as soon as the dollar again strengthened up, the Canadian dollar fell, right? So again, it's going to happen. It's not foolproof. I'm going to say this much too. I put my neck on the line by showcasing this trade. It could very well work against me in the coming week. I got no clue. Right? I'm not talking about a position that I put on in the past. I'm talking about a position I'm putting on right now. And normally for these positions, the hit rate will be under 50% because it's tough to time that turn in the market, especially when people are crowding one specific side. If we look back just a little bit, right, of the COT data, we can see that as we get max crowding occurring over here, Canadian dollar goes up, right? Let's try to find some other points here. So what do we have here? So here we have the commercials being maximum short, the other side being maximum long, right? The small specs and the large specs being maximum long. If we were to put a short position on here, let's say we held on to it, we might have been kicked out of it. The idea usually these sort of trades is, hey, the daily candle of the day you got in, that should be your stop. Because if it doesn't turn there, then you didn't pick the top or the bottom, right? That's how you should look at it, and maybe wait for another entry. As we could see, because it obviously rallied up, went back up here, could have waited a little longer here. Here we're getting maximum short commercials, maximum short longs. The small specs are at 90. I would be taking a 90 for sure. And then the market finally rolls over. And notice how when it's rolling over, the positioning is obviously getting all changed up throughout that process, right? Until we're basically at the bottom here, right? So, and you get situations such as this one where the commercials are long for quite a bit of time, large specs are short quite a bit of time, but small speculators are stuck in the middle. You wouldn't be taking this trade, right? There just isn't much alpha or anything to be taken on this type of trade, right? But here, notice what's happening over here. Here, small specs finally dived. Large specs are at 13. Might take that, might not take it. And what happens the moment small speculators give up on the long idea and get short? It finally goes back up again a bit, right? So we see that happening here. Now again, there's no guarantee that this trade is going to be working out. I will say this much. If you hop on Twitter, for example, Canadian economy, this is just the very top of it. Post after post after post after post, it's about just negative news about the Canadian economy and how people are getting screwed and the citizens hate everything and how negative things are. Even on financial news, you keep hearing about it. So it also, again, if the sentiment is there and the positioning is there, right? Positioning is much more important than the sentiment. People can talk a big game, but the question is that how people are positioned? Because again, the positioning matters because once this gets unraveled, right, that we see that there's so much short interest, not interest in the sense of typically the stock market, just interest in being short the Canadian dollar. If that trade starts not to work out for these people, they're going to start covering. And obviously that's going to give us a drift upwards. But let me show you the actual position. So this is how it looks like, right? This is 7 contracts, Canadian dollar futures, notional value of about $512,000 right now. I'm essentially flat on it right now, right? I'm down $76, which is nothing. When do I get out of this trade, right? Let's talk about that. So this is the candle I'll be using to trade a round of. I'm looking for essentially any close below here. This will get me out of my trade, okay? Will it get me out of my trade permanently? No. I can look to see if that level gets regained. I can wait for another COT report because there was a holiday this past week on Wednesday. The COT report was delayed to tomorrow, Monday, which you might be watching this on a Monday. So I might have more updated information on it. When I say it might be updated, well, if all of a sudden the positioning is different, no longer are they close to being max short and so forth, obviously there's no reason for me to take this trade, right? But unlikely the position is going to be unwinded if the price action doesn't warrant it. Very rarely do you ever see that. But for me, a move below here, below this candle here on Tuesday, June 18th, I'll get out of that trade. And I'm looking for a close below it, right? A close below, not just, touch and I'm out. a close below to get me out of the trade, and I'll look to re-enter it if maybe the correlation failure is still there, let's say, which would be tough to see if it obviously goes down, but maybe the dollar really rips up higher, you know what I mean? So you can still get some relevancy in correlation failure in a sense that the Canadian dollar is like not really dropping by much, if you understand what I'm getting at. Now, I normally don't like to talk about targets because normally we're going to be using positioning to figure out targets. Things that stick out right away to anybody's eye, obviously, you know, pattern recognition here is obviously just a move back up here, which is about a 5% move. On a $500,000 position, a 5% move is about $25,000, right? So that's, you know, if the trade works out, that'll be the first zone I'll be looking at to see, do I take things off here? How is the positioning look and so on? You know, in a perfect world, you get a recovery back here, but this is just a pipe dream. You know, there's no reason to even thinking that far, but there's a 14% possible upside. And the only reason that's worth mentioning is the fact that this level, the actual notional value of contracts being traded right now on the Canadian dollar is so extreme that I don't think you could even find a time of history here where it's been this extreme. Just look at this data here, right? The closest was back here that we had back in 2017. That's the closest we got. And notice this, you know, nice little push higher, you know, that occurred here. What are we talking about here? Let's say, obviously you're never going to capture the whole value. So this 12% that I'm showing you, you're never going to capture 12%. It's impossible to buy the bottom and the top. But that's a 12% range that we got, right? That's the last time we saw anything come remotely close in terms of this actual size. But I am hoping that in the next week or two, we see some resolution of whether the price actually goes up or down. Right now, we're kind of consolidating, right? If the dollar continues to show strength, it's going to be a little tough for it to get some steam under its sails, but we expect that it will, especially when the positioning is as it is. I'll keep you guys updated on the trade. If you have any questions for me, especially how you use the COT data and so forth, just leave it in the comments below. We'll have a conversation about it. I know all my past videos have been about stocks, but believe it or not, the majority of my trades tend to be in the future space, various commodities. I trade the metals. I mean, sometimes if you guys glean at my actual portfolio in my other videos, you will see all different sorts of, you know, metals and currencies that I trade. Sometimes I have softer grains, you know, like cacao or coffee in my portfolio, you know. So I do trade a whole bunch of different things, and I do use the COT data for that. But if you enjoyed this content, and if you want to see more, leave a like to this video, leave a comment again if you have any questions. But other than that, have a great trading week and good luck out there.